With a degree, I have dedicated the last 10 years of my life to studying finance and money. I have an accounting degree and a job in finance, followed by investment banking. One of the most valuable lessons I've ever learned is how to manage my money, identify my bad financial habits, and overcome them. I'll therefore be sharing with you in this video 9 of the most prevalent poor money habits that people have and offer advice on how to overcome them. First and foremost, pay yourself last. This was introduced to me in Robert Kiyosaki's book, Rich Dad, Poor Dad, and it's one of the keys to reaching financial independence. There are 2 main ways that people pay their bills, according to Robert. The first method is the practice of the impoverished, which is to pay oneself last. Upon receiving your income, you promptly pay for your rent, phone bill, subscriptions, and social plans. If you have any leftover funds, you allocate them for savings. The second strategy he discusses is the tendency of wealthy individuals who act in the exact opposite way. You should pay yourself first, as it is how they pay themselves. The moment you get paid, take out at least 10% and deposit it into your savings account. Think of it as paying a bill. This is crucial, and by taking this action, you can be sure that the money will be conserved rather than slipping through your fingers through frivolous purchases. It's likely that many people are thinking, there's no way I can do this. I live paycheck to paycheck, but what's astonishing is that if you set aside that 10%, your mind will find methods to organize your expenditures and finances so that they last the entire month. You won't even be aware that you're saving money in the background. Individuals have a backward mentality when they spend all of their money on things like paying their bills, buying new things, and vacations. They then save what's left over. The secret is to take care of yourself before making other people richer by purchasing their goods. Number 2, getting used to bad debt is the second poor financial habit. Debt appears to be the standard these days. Individuals are taking out loans to purchase even the tiniest items, including clothes and presents. I have a strict rule that states I shouldn't purchase anything with any kind of debt until I can afford to pay for it completely with cash. Keep in mind that credit card firms profit from your bad financial behavior, so they want you to do the same. With an average credit card interest rate of 22%, all perks and privileges offered by these credit card firms are nullified if you are unable to make timely payments. Number 3, this is related to the first principle, which is about paying yourself first. Basically, this means setting aside enough money to have a 3 to 6 month cushion in case something unexpected happens. This is really crucial, and knowing that you have this buffer set up and ready to go whenever you need it will ease your mind. You can use that mental energy to focus on things that are more important. Therefore, the first step in gathering this 6-month cushion is to pay yourself. Once you have your stash, start saving the remaining 10%. You can then use the extra money you save to increase the size of your investment fund and consider making investments. The fourth is not accurately understanding your income or expenses before determining where you are going or coming from. How do you determine your desired social status? A phenomenon known as lifestyle inflation occurs when expenditure increases in tandem with income growth. It's a vicious cycle whereby you spend more money the more you make, earn more money, buy a better car, purchase a bigger house, spend more, and so on. It's amazing how commonplace this is, yet it's a surefire way to wind yourself in trouble. You want to plan ahead and take charge of your financial situation. It's crucial to keep a budget tracker that shows your income as well as the amount you pay yourself first. We talked about 10% of your income, which excludes your expenditures, loan repayments, bills, mortgage, rent, and other expenses. You should monitor your budget tracker. Use the tracker to plan a date night at least every 3 months. As opposed to those who just daydream about money but have no idea how to go about acquiring it or managing it, those who know exactly where they are financially, their assets and liabilities, and a clear goal for where they want to go financially and all the steps they need to get there. These set of people are more likely to get a lot of money and build wealth. You'll take action just by being aware of this and by seeing the statistics in plain and white and black. Having pricey hobbies is the fifth terrible financial habit. Many people enjoy shopping, so I suppose that's part of the retail therapy, but once more, social media, marketing, and these multi-billion-dollar corporations love to tell us how much money we should spend and how much we should save instead of investing it. For the next start, we have only been saving. To enhance your financial status, you can either increase your current income and preserve more of it, or you can generate new sources of revenue. A combination of the two is the best option. Wealth cannot be created by earning more money and spending it all, but it also cannot be created by concentrating solely on saving, because there is a limit to the amount of money that can be saved. Your progress with those cashback websites is limited. In order to actually accumulate wealth, you must consider both income streams, ways to increase your income, as well as ways to preserve a larger portion of it. The earning side is uncapped, whereas the saving side is. It's boundless. Investing in the stock market, requesting a raise, or launching a side business all have limitless potential rewards. However, you should overcome the unhealthy financial habit of believing that conserving money can significantly boost your wealth. The seventh is overpaying taxes. The largest expense you will incur in your lifetime will be taxes. Everyone must pay taxes, but many just pay what they owe without thinking about how they might lawfully lower their cost. This is where legality comes into play. The wealthy are aware of illicit corporate arrangements that offer tax benefits. They minimize their tax obligations by hiring tax experts. Therefore, knowing how to interpret tax laws so that they work in your favor is one of the finest strategies to grow your wealth and get ahead of the game. Investing through an ISO or Roth IRA, for instance, can protect your dividends and profits from taxes. If you're a solo printer, you can also choose to operate as a business rather than an individual. All of this is perfectly lawful, but if you disagree with this and would rather pay more in taxes, regardless of whether you can legally lower it, it doesn't hurt to know the tax laws and lower your tax burden so you can use the money saved to support causes that directly reflect your values rather than letting other people determine where that money should be spent. I am going to do a tax video if that's what you want. I've already provided an overview of my motivations, but I'm not sure if I should make this public. Either way, I can speak about this subject, so if you want to see it, let me know in the comments section below. Putting off investing for too long is number 8. As soon as you start saving and have that buffer or stockpile, as we mentioned earlier, you should look into investing that money so that it starts working for you. You should diversify those investments so you can withstand a variety of life events, but you shouldn't leave that money in a bank account because inflation exists and you will effectively be losing money every year. I therefore have a mix of risky investments that I'm willing to lose as well as safer ones. Once you have sufficient saving, you should start researching various investment approaches. Make sure not to put all your eggs in one basket. Diversification is very important. I would advise you have some long-term investments in big cryptocurrencies like Bitcoin and Ethereum. A lot of folks are still skeptical about cryptocurrency investments because of the unstable volatility of the market. But trust me, crypto is the future. Also, buy good company stocks and ETFs. As I said earlier, if you want me to make a more detailed video on investments or you have a question, please leave a comment and I will see to it. Never leave more money in a bank account than is necessary. I'll also include a link to my other video which discusses what you should be doing with your money during tough economic times. You will always be unable to invest for a variety of reasons, such as lack of time, funds, or knowledge of where to begin. But the longer you wait to begin investing, the more difficult it will be for you to achieve the same degree of financial independence as someone who begins earlier. Finding the right person or resources to help you relate to your finances in a way that most appeals to you is all I'm doing. Whether that's from the perspective of an employee, an entrepreneur, someone who takes less risk, someone who takes more risk, or someone else entirely, there will be someone who more closely aligns with your investing style. I sincerely appreciate you watching this far. I've included a link to another video about building wealth and making money work for you in case you enjoyed this one as well. Thank you and see you soon.